So in the article, I give two scenarios where CPI in the United States goes up. And so the first scenario is, just imagine a theoretical country. And this country is responsible for 40% of all copper production in the world. And we use copper is very important. We use it in electronics, electricity. And so one day the country gets overthrown by anti-industrial rebels. And these are people that think, the modern world is bad and we need to discontinue and go back to like an agricultural lifestyle. And so overnight, the copper production goes to basically nothing. And so the world is shocked by this, and electronics go up, and renewables become prohibitively expensive, and countries have to juggle their energy supply and burn more fossil fuels, like what we're seeing in a lot of places right now. And so CPI goes up to 15% because there was an actual disruption of the real world. And so that's scenario one. And scenario two is the United States gets overthrown by rebels. This time it's modern monetary theory rebels. So the MMT,
Stephanie Kelton.
Yeah, she leads the charge and she overthrows the treasury, and we implement $5,000 checks to every man, woman, and child every month. And this money just gets printed by the Fed and gets distributed. Now there's all this money in the system. People obviously, they buy more stuff. It stresses the supply of things. There's not enough stuff. We see same sort of things. Electronics get more expensive. There's energy constraints. Countries have to pivot and burn more fossil fuels. And so both of these scenarios produce a world where, let's say, CPI is 15%. In one case, CPI is 15% because 40% of global copper production is offline. In the other scenario, CPI is 15%. So there are increases in the prices of goods, but it's fundamentally driven by solely monetary creation. And I say, which of those scenarios should Bitcoin protect investors from? In other words, which scenario is Bitcoin going to go up in? Some people think both, but I say it's only the second one.
Yeah, and that makes sense, because if you think it through logically in this random country, this what did you call it again?
I called it Rondia.
Yeah, Rondia. Now, say the rebels get overthrown and a new capitalist government comes into power and they restart production. You'll have a massive increase of copper into the market, and the prices will come back down.
Exactly.
So you'll get a price fall. But once, in the second scenario where Stephanie Kelton and Andrew Yang have implemented UBI and increased money in the system, that money's never coming out. So that raises up the kind of baseline for the cost of goods.
Correct.
So
Yeah.
And this is where it gets super interesting, because we're going to get into why people have been saying, well, Bitcoin has failed as an inflation, and you disagree with that.
I do disagree. In the example we just talked about. So in that second scenario.
Sorry. So our problem at the moment is because we've had both at the same time.
Correct. There have been both.
Yeah.
And so let's just walk through that. In the beginning, there was tremendous monetary creation. So the US prints a ton of money to bail out COVID and everything else. Bitcoin goes from 10K to 69K. Like, let's make no mistake, when they printed money and they expanded the money supply, Bitcoin was one of the best performing assets. Like, it went up tremendously. If you bought Bitcoin before there was inflation, aka printing money, you did very well. The Bitcoin hedged you against the expansion of the money supply. Everything and other things went up in value too. And we'll get into that later on of, yes, stocks go up, yes, houses go up, but Bitcoin went up more. And there's a discussion there. But so Bitcoin goes up, there's inflation, and it protected investors. And that money creation started circulating through the economy. And that's the other thing about inflation of the money supply. It doesn't show up in consumer prices immediately or evenly, because it circulates in different ways depending on who got it, how they spend it, what the supply situations are there. But so eventually that printed money gets its way through the economy, and it goes faster because they actually did stimulus checks, and you start seeing the prices of goods come up. But they haven't been printing money for a while. So that was the initial inflationary impulse, and Bitcoin did very well there. later on, we have this other inflationary wave that is really centered in food and energy. And it's because of the war. It's because of supply chain disruptions. We can't separate that from decades of underinvestment. So let's be clear. Like, the war was the spark that set everything ablaze, but we built up a pile of kindling for decades by not investing in this stuff. So we can't just blame the war, right?
Okay.
That's not the right way to look at it. But the war did kick it off. That is the other sort of inflation. That is a massive disruption of supply in literally countries do not have access to enough natural gas, enough fertilizer, enough food. Sri Lanka's in a devastating crisis. Other countries are in devastating crises. Prices and, gas in Europe is hugely expensive. That's the other sort of inflation. And that's where the CPI is coming from right now. We had the impact, and there is still some of that impact from the printed money, but most of what we're seeing today, I believe, is that actual supply disruption. And so not only should Bitcoin or gold, neither Bitcoin nor gold nor other inflation hedges should protect you from that. Like, in a world where there are supply disruptions, the world is poorer. You don't get to hold an abstract financial instrument and get richer when the world gets poorer. The only way you can do that is you have a derivative on the price of oil. Like, okay, that works, showing an oil producer, whatever. But apart from that, there's no inflation hedge that works in that way. And so that's the inflation we're seeing today. And so Bitcoin's not going up with that. And you add to it, actually, in my definition of inflation, and in what I think is, not mine, but the correct definition of inflation, there's actually been, it's disinflationary, it's anti-inflationary. The money supply has been contracted tremendously. Stocks are down enormously.
Ah, that's interesting. Okay, right. Because there's been a correlation between the S&P and Bitcoin.
Yes.
And so if stocks are falling in price, naturally Bitcoin should. But have you measured the actual total supply of money and money substitutes? Like, has that actually shrunk?
Yes.
Yeah.
It's down tremendously.
And that's why Bitcoin's also down.
In my opinion, yes. And, there are scenarios, like theoretical scenarios, where stocks could come down and Bitcoin could go up. But in reality, we're looking at a world where, so interest rates are up. So the Fed is contracting currency dynamics.
Yeah.
Stocks, which are just another part of the money supply, are down like enormously. Housing is kind of down, or at least has stopped going up as quickly. And the bond market has been contracting. So that's across the board, all the aspects of the money supply that I would point at, they're all contracted, they're all down. So that's actually the opposite of inflation. And so if we're saying Bitcoin is an inflation hedge, there's actually not inflation right now. We're in a monetary contraction. We're not in an inflation. We're in a monetary contraction with consumer prices going up.
But what is the reason that Bitcoin contracts with them? Like, what is it? Because the people who hold the assets, they're losing value in their stocks. They want to hold cash. Therefore, what can they liquidate? Is that what's happening?
There's a ton of actual market dynamics, right? From fear and losing confidence, or you're getting margin called on your loan, or your stocks are going down, so you're to Three Arrows getting liquidated and Celsius failing. So there's a million micro factors.
Yeah.
But the bottom line is, when the total value of all financial assets and the money supply is down tremendously. It's common. We've been in this space. We talk about Bitcoin is here to protect you from money printing and from expansions of the money supply. It has other functions too, and censorship resistance. And I don't mean to, I'm not talking about those, but those are also a critical part of Bitcoin's identity. But I'm focused on the store value piece here.
Right. Okay. So if we go back to CPI, CPI can be kind of a useful tool as long as it's not just linked to inflation. It's good to have a general understanding of the increases in price. Yes, look, it can be totally wrong. Yeah, it could be reported at 9.1%, and it's actually feels like 15% for you as an individual. But to have that general understanding that prices are increasing is useful. To attribute it as inflation or down to inflation is the mistake.
Correct. So CPI, I think, is directionally correct. So it may not be the actual number. It may not be 9%. It may be 15% is like the quote unquote real increase of consumer prices. But I generally think it's directionally accurate. If it's going up, those prices are probably going up. If it's coming down, those prices are coming down. It's just the number isn't exactly correct. And so that CPI increase, it could be driven by actual inflation, aka increasing the money supply, or it could be driven by supply disruption. And both of those are an option. Either way, the CPI itself is not inflation. It's a lagging indicator. And that's the other thing to understand with it. You know, we've kind of talked about this a little bit, but they print money. There's actual inflation of the money supply. And then that will translate to consumer prices going up. There will be CPI increases from that, but it's a lagging indicator.
So would it be more helpful, therefore, if money was backed by something? So if whether it's gold or Bitcoin, if it was backed, would that help to get a better measure of inflation?
So, I mean, in a world where money, if you take away the power for money to be created from thin air, it dramatically simplifies this equation to a really manageable extent. I mean, that is the bottom line. It's part of the dynamic there. Part of the reason there can be so much monetary expansion is because the Fed has countless tools to increase the money supply. It's not just, I mean, not that they even do the stimulus checks, but it's not just stimulus checks. There's QE, there's repo markets, there's swap lines. There's all sorts of tools that most people, and even myself included, don't, understand in sufficient detail. I mean, this is something that I think isn't talked about enough, but there is no human being on this planet that understands all the intricacies of the global financial system. It is more complex than anybody has truly detailed knowledge of.